The S&P 500 just closed lower by 0.2%. Markets drifted into the red as surging oil prices renewed inflation fears and rising Treasury yields pressured equity valuations. The Dow snapped a recent win streak, weighed down by BOEING, while investors also held back ahead of Friday's non-farm payrolls report. Nvidia moved, energy led all sectors, and the VIX held steady. Welcome to Invest from Zero, your daily U.S. market wrap. I'm here every single trading day to break down what happened, why it matters, and what you should be watching next. It's Thursday, August 6th, and we have a packed show today. Here's what's coming up. We'll start with a deep dive into the S&P 500, then move to the NASDAQ and the Dow. After that, we'll walk through all 11 sectors one by one, so you can see exactly where the money is flowing. Then we'll spotlight the biggest individual stock movers in the mega-cap space, both gainers and losers, with our stock of the day getting a full 30-day chart review. We'll check in on the macro dashboard. That means VIX, Treasury yields, gold, and oil. And we'll close with 3 specific things to watch before tomorrow's opening bell. If you're new here, this is the show that covers the U.S. stock market every single trading day. No fluff, no hype. Just data, analysis, and context. Hit subscribe so you don't miss an episode. Let's get into it. Let's start with the benchmark, the S&P 500. Today, the index closed at 7,709.96. That's lower by 0.18%, or roughly 14 points on the day. Yesterday's close was 7,723.55, so we're looking at a slight pullback. For the week so far, the S&P is up about 2.9%. That weekly momentum is encouraging for bulls. When you see green day after green day, it builds confidence. Now here's the context you need. The S&P 500 is the single most important number on Wall Street. It represents 500 of the largest U.S. companies and roughly 80% of total U.S. stock market value. When this number moves, it affects retirement accounts, pension funds, and investment portfolios around the world. To put today's 14-point move in perspective, the S&P 500 averages about a 20 to 30-point daily move in comm markets. Neither buyers nor sellers could establish clear control today. It was a back-and-forth kind of session. Now let's move to the other 2 major indices. The NASDAQ Composite, which is heavily weighted toward technology and growth stocks, lost 0.06% today, closing at 26,348. The tech sector was a mixed bag. The NASDAQ came in ahead of the S&P 500 today, and that relationship matters. When the NASDAQ leads, it usually means risk appetite is strong and investors are favoring growth. When it lags, it could be a warning sign that the rally is narrowing. Today, the NASDAQ led, which is exactly what bulls want to see. The NASDAQ has been under pressure recently, and today's move was relatively contained. Moving to the Dow Jones Industrial Average, it finished lower by 0.85% at 53,885. The Dow underperformed the S&P today. Remember, the Dow only tracks 30 blue-chip stocks, and it's price-weighted, not market cap-weighted. That means a high-priced stock like Goldman Sachs or United Health can move the Dow more than a lower-priced stock, regardless of company size. The old economy names in the Dow struggled today. The key takeaway from the indices: all 3 are moving in the same direction, which shows broad conviction in the market. Now let's get into the sector breakdown. A sharp rise in crude oil prices driven by Strait of Hormuz tensions lifted energy stocks broadly, while rising Treasury yields and a firmer dollar weighed on metals and mining names in the materials sector. This is one of the most important parts of the show because it tells you exactly where the money is flowing. Today, 3 of 11 sectors finished in the green and 8 in the red. Most sectors were red. This was a risk-off day, leading all 11 sectors. Energy up 1.5%. In second place, communication at plus 0.28%. Third, healthcare at plus 0.18%. These top 3 sectors are where institutional money was flowing today. The middle of the pack, Consumer staples minus 0.26%, technology minus 0.31%, financials minus 0.33%, and consumer disc at minus 0.46%. Now the laggards. Utilities came in at minus 0.64%. Industrials at minus 0.85%. Real estate at minus 0.86%. And bringing up the rear, materials finishing down 0.9%. The spread between the best and worst sector today is 2.4 percentage points. That is a wide spread, which tells you there is strong rotation happening under the surface. Defensive sectors showing relative strength. That could be a sign of late cycle positioning or general risk aversion. I always say, follow the sectors. They tell you the story before the headline does. Now let's look at today's biggest movers in the megacap space. Starting with the number one gainer. Disney, ticker DIS, absolutely climbed today, up 2.87%, closing at $104.68. For a megacap stock, a 2.9% move in a single day is significant. We're talking about billions of dollars in market cap change in just a few hours of trading. Disney reported fiscal third-quarter earnings after the close on August 5th, delivering adjusted earnings per share of $2.06 against analyst expectations of $1.88. Revenue came in at $25.25 billion, up 7% year-over-year, with streaming revenue rising 11% and total segment operating income jumping 21%. The volume will tell you a lot. If this move came on heavy volume, that means big players are behind it, and follow-through is more likely. If it was on lighter volume, be more cautious. If you own DIS, congratulations on a great day. If you don't, the question is whether this move has more room to run or if it's already priced in. As a general rule, chasing a stock after a big up day is risky. But if the fundamentals support it, pullbacks can be opportunities. Rounding out the top 5 gainers. Number 2, Microsoft up 2.5%, closing at $499.86. Number 3, Exxon up 2.1%, closing at $154.84. Number 4, Eli Lilly up 1.9%, closing at $1,191.94. Number 5, Qualcomm up 1.8%, closing at $160.39. All solid moves in the green. Notice something here. These winners are spread across different sectors, which is a healthy sign of broad-based strength. Now, let's flip to the other side. The biggest loser today, Boeing, ticker BA, dropping 3.33% to $232.19. Boeing continued to weigh on sentiment as investors grew frustrated with persistent production bottlenecks and the company's failure to provide a credible timeline for ramping up narrow-body deliveries and improving cash flow. Ongoing regulatory scrutiny and labor tensions added further pressure on the stock. Context matters. One bad day does not make a trend. What I want to check is, has anything changed fundamentally? If the business is the same as yesterday, a down day might be noise. But if you see follow-through selling tomorrow, especially on increasing volume, that's when you should start paying closer attention. The rest of today's biggest decliners. Salesforce dropped 3.2% to $186.77. Goldman Sachs dropped 2.6% to $1,032.58. United Health dropped 2.1% to $403.97. Caterpillar dropped 1.6% to $856.96. The average decline among our bottom 5 is 2.6%. Significant selling pressure in these names. Something is spooking investors. Selling pressure was concentrated in a few names rather than being broad-based, which is actually a healthier sign for the overall market. As I always say, a down day is not a disaster. It's part of the natural rhythm of markets. Every stock in history, even the best performers over the long run, has had days like this. The key is understanding whether anything has fundamentally changed and whether the thesis for these companies still holds. Time for our Stock of the Day segment. Today, that honor goes to Boeing, ticker BA. Let's put this stock under the microscope. BA dropped 3.3% today, closing at $232.19. Now let's zoom out and look at the bigger picture. Over the last 30 trading days, the stock has ranged from a low of $204.80 all the way up to a high of $240.19. That's a 17% trading range in just 1 month, which tells you this stock has been relatively well behaved. Not too much drama in either direction. At today's close, the stock sits 13% above its 30-day low. Right now, the stock is trading very close to its 30-day high. That means momentum is strong, but also that resistance could appear at this level. Watch for a breakout or rejection. This was the single biggest mover in our entire mega-cap watch list today. I chose it as stock of the day because when a name this size makes a move this big, it tells you something about the overall market sentiment and what type of stocks investors are favoring. If you're a long-term investor, days like this are noise. What matters is the quarterly and yearly trend. If you're a short-term trader, this kind of volatility creates opportunity. But as always, this is not a buy or sell recommendation. It's just data and context. Do your own research or talk to a licensed financial advisor before making any investment decisions. Now let's pull up the macro dashboard. Oil surged nearly 4% as the fragile ceasefire with Iran remained unresolved and Houthi forces attacked a Saudi vessel in the Red Sea, keeping supply chain risk elevated. Gold held firm near record highs on safe haven demand, while the 10-year Treasury yield edged up to 4.67% ahead of Friday's payrolls data. This is where we check the pulse of the broader financial system. First up, the VIX. Wall Street's fear gauge closed at 15.2, falling 4.2% today. That puts the VIX between 15 and 20, a healthy normal range. For context, the VIX measures expected volatility over the next 30 days using options prices. This is a healthy VIX level. Not too scared, not too greedy. Markets can trend in either direction from here. Next, the bond market. The 10-year Treasury yield rose to 4.67%. That's above 4.5%, putting significant pressure on growth and tech stocks. The bond market is often called the smart money because it tends to price in economic changes before stocks do. When yields move, the stock market listens. Gold rose 1.2% today, trading at $4,299 per ounce. Safe haven demand is picking up. Gold is the classic safety trade. When investors get nervous, they buy gold. When they feel confident, they sell it. Crude oil gained 4%, sitting at $78.23 per barrel. Energy stocks should benefit from that tailwind. Oil prices affect everything from transportation costs to consumer spending. Putting it all together, the macro picture today is mixed. There are some cross-currents that could create volatility in the days ahead. Stay alert. All right, let's close with my watch list for tomorrow. These are the 3 things I'm tracking most closely heading into the next session. Number 1, Friday's non-farm payrolls report and what it signals for Federal Reserve rate policy. Number 2, any breakthrough or breakdown in Strait of Hormuz ceasefire talks and the resulting move in oil prices. Number 3, Boeing delivery rate disclosures and FAA regulatory updates in the weeks ahead. Write them down, set your alerts on these levels, and be ready when the opening bell rings. Preparation is the difference between reacting and anticipating. And that is your complete U.S. market wrap for Thursday, August 6th. Today we covered the S&P 500, the NASDAQ, and the Dow Jones. We broke down all 11 sectors, went through the biggest movers both up and down, gave our stock of the day Boeing a full 30-day chart review, checked the macro dashboard with VIX, bonds, gold, and oil, and finished with 3 things to watch for tomorrow's session. If you found this valuable, please hit that subscribe button. Turn on the notification bell so you get these episodes every single trading day. Share this with someone who's trying to learn about the markets. Drop a comment below and let me know. Are you bullish or bearish heading into tomorrow? I read every single comment and try to respond to as many as I can. Remember, nothing in this video is financial advice. I'm just sharing data, analysis, and my perspective. Always do your own research or consult a licensed financial advisor before making investment decisions. I'll be back tomorrow with another full breakdown. Until then, invest smart, invest early, and invest consistently. This is Invest from Zero. Good night.